a lot of Saudi barrels are coming to the U.S. and really the reason for that is the heavily discounted pricing that Saudi Aramco offered to buyers for April, and again they're offering for May. And what they've done is basically discount pricing so much that it entices buyers to come in aggressively and buy it because of the arbitrage potential. In many cases, they're dropping pricing by $10 a barrel relative to Brent and other benchmark crudes. And so what the Saudis have done effectively, and other oil producers are discounting pricing to make it somebody else's problem to figure out the storage situation. But as we look at it today, we're at 250 million barrels of incremental storage, and according to our analysis, demand is probably 15 to 20 million barrels less than where supply is throughout the second quarter on average. And so that tells us that there's going to be probably somewhere up to as much as 800 million barrels of storage that's going to go on tankers this quarter, and we're at 250 at this point. And so we're going to be taking a lot of capacity out of the market, and we're at 10% today, and we're expecting that to get to 25% by the end of the quarter. So a significant tightening in the amount of ships available to actually be used for trading and moving a cargo from one region to the next.
Right. Right. Omar, good morning. Tanveer also joining into this discussion. What would that availability of that capacity mean for prices? Because ship owners are being offered 12-month deals, I'm given to understand, at time charter rates that are more than double the mid-cycle average. So the mid-cycle average is $40,000 per day. Right now, the rates for some of the crude carriers is $90,000 per day. Is this the peak as we see it in prices, or can prices go up further from here?
Yeah, it's a good question. The fleet's only getting tighter from here. The supply of ships for other charters is getting smaller and smaller, and so that incremental charter looks like it's going to be potentially higher from here. But what's happened is spot rates have gone through the roof to the point where VLCCs just a week and a half ago had reached $200,000 per day, which is the equivalent of about $5 a barrel for a typical 40-day voyage. And so what charters have done is basically say, rather than do a 40-day voyage, let me see if I can find a vessel and put it on a 6-month contract or secure it against a 9-month charter. And now they've gone up to 12 months. And so they've gone out that far to lower the rate and make it somewhat economical, because at $90,000 a day, that's probably the equivalent of maybe $250 a barrel. So they're discounting the holding price by going out longer. And so as we see it, at least for the next couple of months, we think rates are going to be very strong for tanker owners across the board, both crude and refined products. And eventually that's going to give way to probably a softer trend as the market starts to get back into balance, and then a destocking trend starts to follow suit.